And you told me that even on those days, even these last two Fridays where the price has gotten smashed, most of the people who are calling are still buying because you said they realize what's going on. They realize the price smash isn't real.
Yeah, for sure. Uh, Sales would purchases would outweigh people selling back 99 to 1.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and we are officially starting our big silver short countdown. That's right. I know I've been talking about it, but the book is now weeks away. Hopefully, I even have an exact date soon, although it's nice to have Andy Schectman, owner of precious metals dealer Miles Franklin, who was one of the people interviewed in the book. And Andy, you really shared some things that maybe we'll touch on a little bit today to give a preview that I thought were stunning, especially that put another light on the whole when gold goes from 1,000 to 700 in 2008, silver goes to 21 to 9, which people say was just panic selling. I personally dispute that, and you added a key data point. Of course, we have coronavirus melting down the stock markets, historic bond yields. I heard the 10-year bond is going to be negative by the time we hit lunchtime. So lots going on. And Andy, it's a pleasure to have you back on the show. How are you doing today, sir?
Good to see you, Chris. Yeah, I'm great. Thanks for having me. I appreciate it very much. Good to be here.
Yeah, well, I mean, where to begin? I think in the last 2 weeks, maybe it's safe to say we've finally seen the beginning of this bubble pop. Now, who knows when the QE package arrives, and maybe everyone will have forgotten this by election time, but curious your thoughts on what we just witnessed the last 2 weeks.
I think it was long overdue. By every measurement, every metric, stock market was at record levels, 12 years running unabated. Never seen that in the United States. By every standard measurement, price to book, price to yield, any way you want to measure it, stock market was well overvalued. And, maybe this was the pin that started the air leaking out of the bubble. I don't know, but suffice it to say, I think that, when I look back at events, it's never what you expect that is the catalyst. But certainly, I would argue that this is probably or very likely the beginning of the air being let out of the bubble. I don't see how it can't be. I don't think that yesterday was the crash. I think the crash is still ahead of us. I think it was the beginning. I think we have a long way to go to reach fair value. I mean, heck, back in the day, Chris, no one bought stocks unless they were trading at single-digit price-to-earnings ratios with paying somewhere in the neighborhood of a 6 or 7% dividend yield. We are very, very far away from those kind of numbers. So in terms of what is fair value, I think we have a long way to go. Absolutely.
Yeah, I'd agree with you on that. And it's funny, well, maybe not funny, but, if you look back to some of the stock levels in 2007 before it got clobbered and then see how much higher we are now. And despite Fed and the president telling us the economy is great, I think you and I and a lot of others think 0% interest rates have a lot to do with that, which is what leads so many into gold and silver. And obviously we see the reasons CNBC says why people are buying or selling. We see the Comex price, which has gotten pounded pretty thoroughly in the last week or two. But I'd love to hear what people are actually doing in terms of buying or selling physical silver.
Sure.
And gold for that matter too, of course.
Sure. As I answer that question, I think it's important to note that it used to be called risk on, risk off investing with stocks and bonds and interest rates. So you would during your working years, you'd put your money in stocks. That was risk on. And as we got older towards retirement, we'd put our money in a safer investment, bonds. In the 90s, I can remember interest rates on U.S. Treasuries north of 9%. You put a couple $1,000,000 into Treasuries at 9%. You retire with $180,000 a year. You're on easy street. You're not touching your principal. Those days are long gone. Now that same $2 million with interest rates on the 30, just about 1%, bring you to $20,000 instead of $180,000. And so the inverse relationship between stocks and bonds is gone. And so where do people put their money? In fact, the group Ibbotson, who is now a partner with Morningstar, the mutual fund rating company, came out not too long ago and said there are no inversely correlated assets to the U.S. stock market anymore except precious metals. And so one would expect when the stock market goes down, like we saw yesterday, that precious metals would go up. And very often there is, as Jim Sinclair puts it, MOPE, management of perspective economics. And I think they're trying to manage the perception of reality right now. Ultimately, gold and silver will go much higher. I'm very, very convinced of that. But right now, the price is certainly not an indicator of demand. Over the past 2 weeks, the demand for precious metals has been off the charts, at least in terms of the physical buying here in the U.S., which has been vastly different from what we've experienced over the preceding several of months, where people in this country are arguably somewhat asleep at the switch. Gold is at all-time highs against every major currency in the world, with the exception of the U.S. dollar. And as Doug Casey likes to say, it's the prettiest mare in the slaughterhouse. And so it's not gaining the attention of the U.S. public. They've been enamored with the stock market that goes up unabated like a helium balloon released by a 6-year-old. And so at some point, if this is the pin that pricks the bubble, at some point there becomes a rush into metals by the mainstream. What we've seen over the last few weeks is a huge amount of buying from the choir. People who've been listening to you and I and others for a very long time, this is the realization of what they've been preparing for a very long time. Maybe not the way they had envisioned it, but that type of demand alone is enough to keep me working at night every night till 7 o'clock and p.m. for the last couple of weeks. So very, very brisk, but I would still characterize it by void of mainstream participation. When that comes, it'll be game shift. Give you an example. In 1980, the average allocation to precious metals was about 8% in the U.S. portfolio. Now it's 0.5%. But if you look at the mean, the average over the past 40 years, it's about 2.5%. If this is the pin that pops the bubble, if this is what wakes people up, and they run into precious metals, and all we see is a mean revision to 2.5%, you're talking 5 times demand in this market. And overnight, you'll see product disappear. That, I believe, in a lot of the presentations I gave over the years, I always thought that the biggest concern would be lack of available product, because I've seen it over and over and over again in disruptions in the supply chain. And I guess what I'd like people to keep in mind, Chris, is that those supply chain problems are just as valid in precious metals. I mean, heck, who's to say New York City doesn't go on quarantine like half the other cities are around the world are going into? And if that happens, the West Point Mint that delivers the Silver Eagles and gold is in New York. How about the Rand Mint in South Africa, or the Canadian Mint in Ottawa? They all have to find their way across a supply chain. And when the supply chain of the 5 major mints, US, Canada, South Africa, Australia, and Austria, when there are problems with those supply chains, it's game over in a matter of days in terms of product in this industry. I've seen it repetitively. The only reason I haven't seen it now is that since 2017, up through from 2011 to 2017, Chris, the people that were hanging on, that bought near the top, when Bitcoin took off, along with the Dow Jones that kept rising, there was a tremendous amount of capitulation. All the people who had bought it for reasons maybe different than I would own it for, or someone who's been investing gold for a long time for preservation reasons, those people that were buying it to profit, I think a lot of them capitulated. And over the last couple of years, there's been a tremendous amount of product overhang. No supply issues whatsoever. But I envision, if this is the pin that popped the bubble, if the air continues to leak out, it won't be but before very long whatsoever where you see major supply chain issues, major shortages. And God forbid we see something like UPS, FedEx, or US Mail start to run into delivery issues because of the virus. Now, I'm not trying to overblow it, just simply saying what could happen. And I've always felt that the supply chain issues in this industry, which are very much just in time, is susceptible to this kind of a problem. Hasn't happened yet, but it's on my radar, that's for sure.
Well, I appreciate you mentioning that. That was actually one of the questions I wanted to run by you, because as I hear about Apple supply chain issues and other companies and cities getting quarantined, again, by no means am I an expert of the coronavirus, yet you just, even half of these things we're hearing are true. And then I think about how fragile the whole silver thing has become at this point. Um, and I've wondered if there's any industry where that would be set up for all you already to have an issue. It would certainly seem to be silver.
Yeah, I think very much so, Chris. I think it's a big problem in this industry. In many of the speeches I used to give over the last several years, it was always my number one biggest concern, and that was disruptions of the supply chain. We've seen it repetitively in this industry since 2008, dozens of times, where if the five major mints of the world, US, Canada, South Africa, Australia, and Austria, slow down, the supply chain absolutely dries up, some cases worse than others. And so the bottom line is that, yeah, I think it is. And it's not just the supply chain of getting product from the West Point Mint in New York, or from the Canadian Mint in Ottawa, or any of the other mints across the globe. It's also the delivery services here in the United States. If this does get bad, how easy will it be for UPS to maintain their efficiency, or FedEx, or the post office? And so I think that there's a lot of in flux right now, but I think it's important to be proactive in anything that you're doing and realize that that is a potential problem. Let's take all the health risks out for a moment, because there is so little information really known, and God willing, we all make it through this with nothing more than an inconvenience. I don't think that's the case, but let's just say, for example, that we're not thinking about the health-related issues. The delivery aspect, the supply chain aspect, the just-in-time supply chain aspect of precious metals is really real. It's very valid. And as an example, the U.S. Mint typically runs out of Silver Eagles in mid-November. When that happens, very often, within a week or so, all of the backdate stuff is gone. And for the entire month of December, you have to choose something else other than Silver Eagles. Now, there have been times where it's much more exacerbated and other times where it's more muted. But in general, I do believe that it is a major consideration. And I wouldn't want a whole bunch of my gold and silver floating through the mail service as this thing starts to accentuate, and unknown as to what's going to happen with delivery services. So it's not just the supply chain, which is really valid. It's also the delivery service. So both of them, I think, are concerns, and without being sensationalized, I think they're valid for real.
Yeah, and it's interesting because we've seen silver sit there for the last 9 years. Good simulation and watching paint dry, maybe even less exciting.
Yeah.
Yet when we hear, well, at some point there's going to be a break point, whether it's a war or a pandemic or a bubble popping. I mean, it's almost as if we have all of these, which are certainly unfortunate, but you have all these things in place, and I've wondered if it's something that can happen quickly, because especially on top of it, what is the response going to be? We hear the White House is coming out with their economic response to coronavirus. I don't.
The concept of pushing on a string comes to mind. I mean, look, if you were in an area that was quarantined, how would all the easy money and stimulus packages in the world make you want to go to a ball game, or go out to dinner, or to a movie theater, or stay in a hotel, or do any of the things that in the back of your mind would be very difficult to be doing? And simply because there is a package of easy money and stimulus issued by the Fed and the government, that's not enough to make people not be afraid. And that's the old adage of pushing on a string. And I think it does happen really, really fast. In terms of speaking about the way the coronavirus goes, I listen to Chris Martenson an awful lot. I think he deserves kudos, peakprosperity.com, and he's a very smart guy who has shown, simply mostly through mathematics and logic, how this is happening. And the way that he says is that you have a case, a cluster, and boom, it's an outbreak. And it happens just like that. And in a country where shame on the United States for only 1,000 cases being tested and over 200,000 in South Korea. When these test cases, when they test whatever it is, so they can test if people have it, when these get out to the public and people start getting tested, if these numbers are exacerbated, much more so than the media is letting on to or the people think, very, very, very quickly, these supply chain issues will become real. It'll be like trying to buy toilet paper at Costco. Everyone will rush to get it. And as we were talking about earlier, in 1980, there was an 8% allocation to precious metals in U.S. Portfolios. Now it's 0.5%, but with that mean, the average being 2.5%. So if all we see is we go back to the mean, to the average, regression to the mean, return to the law of averages, that's a 5-fold increase in demand, and overnight, stuff's gone. And I mean that, and that is 100% true, and I've seen it a dozen times since 2008 on in instances that were far less dramatic than what we're all going through right now.
Yeah, it's unfortunate, although from that perspective, sure it'll be fascinating to see how it unfolds. One thing I was hoping you could share with people, you and I talked about this last week, and I thought it was rather interesting. When I was asking you about what the sales volume has been like, you said you've been selling a lot of metal. Then I said, what about on those last 2 Fridays where we saw the price get absolutely destroyed, which I think you and I are in agreement that the main people selling that day were JP Morgan or whichever banks are trading paper contracts at the moment. But I was curious what people are actually doing on a physical level on those days where you see the price get smashed, and I'll let you take it from there.
Yeah, well, first of all, that last price match, I think, was $2 billion worth of metal was sold at the thinnest of trading sessions, right at New York close, and just smashed the heck out of it. Again, MOPE, management of perception economics. But going back to what we were saying about preaching to the choir knows that when that happens, that it's a gift, that it's a subsidy, that it is managing perception, but nothing has changed. The real effect are on the people. That's when I get calls from my buddies who watch from the periphery, from afar, never bought anything from me. But that's when they'll comment and send me a text, see, gold got hammered today. But the smart investor, the person who is cognizant of what's happening, is understands that these kinds of, if someone were to sell that kind of volume, they wouldn't dump it on the market all at once in thinly traded market. They would layer it over the day or 2 days or 3 days when there's most active trading so as to get the best price. This was done to create a perception of reality. The smart people, the choir, people you talk to every day and are listening to you right now, they're the ones who jump in with both feet and view it as a subsidy. And people forget, the old adage that we learned when we were 6, buy low, sell high. It's hard to do. It's hard to catch a falling knife. It's hard to buy and jump in when prices are low. And funny thing is that you see that in the stock market from the mainstream. When there's a correction, all you hear is, well, it's a good time to get in. Well, fundamentals suck in the stock market right now, and they don't suck in precious metals. Show me another asset like silver that is a third of its all-time high, 1980 high. Think of anything that was a third of what it cost in 1980. It's hard to find, let alone an asset that is as valuable, that is as required, and then, oh, by the way, is being hoarded to the tune of over 900 million ounces by the most well-funded, well-informed, sophisticated investors on the planet, JP Morgan. I should have added nefarious too, but bottom line is that when you see in the massive accumulation of precious metals by such sophisticated investors as they've held down the paper price, it kind of paints a backdrop to all of the movements that we see. And I think the smart people who have hung on for a long time, listen to people like you, read our newsletter, listen to the people in the industry who have been at this for a long time, they realize it's a gift, it's a subsidy, because you know what, Chris, nothing's changed. And if anything, with every day, our situation grows more and more precarious. So I think that's how you win in this game. You buy on the dips. You develop a core position and buy on the dips, and that is the way that you win. When we look in the stock market, a market that is trading at all-time highs, that may not be the best idea. Maybe you sell on the pops, slowly layer yourself out, and I would argue that's kind of what sophisticated money is doing on that side of the table. Last couple times we've seen this big pop. Where does it go? Down. Big money's exiting stage left on opportunity of strength. And I think we do the inverse of that. Play this game until the game isn't played anymore. Because I can tell you that, with the Basel III reclassification of gold as a tier 1 asset, the only other tier 1 asset in the world next to US dollars, which happened April 1st of last year, the world central banks are accumulating gold, lots of it. These price smashes, they won't last. They're just going to create a perception of reality that all is okay. Don't freak out. The world's not ending. Well, the last thing the people pulling the strings want to see is a gold price going to the moon along with the equity markets cratering and a pandemic. So, I think you have to trust your gut. You have to have strong fingertips. You have to hang on, trust your gut. And I think it'll lead you in the right direction right now when we need it to speak to us most.
And you told me that even on those days, even these last 2 Fridays where the price has gotten smashed, most of the people who are calling are still buying because you said they realize what's going on. They realize the price smash isn't real.
Yeah, for sure. Purchases would outweigh people selling back 99-1. Most of the people who sold in this market did so already over the last few years. And so I've been accumulating gold and silver every 2 weeks for 30 years. That was a promise I made to my father when we started Miles Franklin in 1990. To me, it's wealth. I don't look at the price. I'm aware of it. But I think there are a lot of people out there who accumulate precious metals. I think you, without putting words in your mouth, look at precious metals as wealth, not as an investment. You own it. It's money. You're glad you have it if you need it. If not, you pass it on to your family someday. But it's wealth, and it's been wealth for 6,000 years in all sorts of chaos and all sorts of trouble, tumultuous times. For me, it's wealth. And so people who are selling it right now either have to or have given up on it. And if they've given up on it, I would be challenged. I would like to know what the alternative is. I guess some of them may go into cryptocurrencies. I can buy that. I don't know much about cryptocurrencies, but I understand the theory. But short of that, I see no place that offers the kind of value, safety, and certainty in the very uncertain times that precious metals do. Certainly it's not in fixed income at the lowest level in the history of human civilization. It shouldn't be the stock market at the most overvalued metrics that we've ever seen. Where do we put it? The bond market at the end of a 25-year bull run? The mother of all bubbles, perhaps? Real estate? I mean, I don't know where you put it. You put it into gold and silver. You don't look to get rich. You look to preserve what you've worked hard for all your life. And you know what? There's an old adage that sometimes return on your money is not as valid as return of your money. And that's kind of what I'm looking at right now.
And so, Andy, for people who are interested in buying or selling, we'll mention you do buy back. So it's not, you're sharing your opinion here, but fortunately you're there to help people with whatever their needs may be with gold, silver, also platinum and palladium while you can still get it. There's another wild one, but how can they find you if they are interested in doing that?
Well, so Chris, we don't do online sales. I've had a lot of bad experiences with identity theft and fraud, and it's something that we could do. I shut down my store. I've chosen not to. I believe in doing things the old-fashioned way. I believe in accessibility. I believe in accountability. I will reply to any one of your listeners who sends me an email at andy@milesfranklin.com. We do publish a daily newsletter. But if anyone has questions regarding their portfolio, regarding ratios, like gold to platinum, platinum to palladium, silver to gold, there's so much to talk about. I would be more than happy to personally answer any of those questions at Andy@milesfranklin. Right there on the screen, you can subscribe to our newsletter. It's free. It comes out 4 to 5 days a week. That is a nice way to stay abreast of what's going on. And, of course, they can call me as well at 800-255-1129, a direct dial right to my desk.
Yeah, and just noticing here, as I already knew, but you do have storage and basically anything someone would need for precious metals. So, again, appreciate you letting folks know how to do that. I'll say when one of the downsides of being overinvested in silver. I'm not good with the diversification. When I did actually have to sell some silver, I think it was 2 or 3 years ago. You actually even made that easy to do, which, I think the process in general is not something people are used to. So Andy at Miles Franklin. And with that said, Andy, appreciate you joining me today. Certainly fascinating times out there. Hopefully, I wonder if we're getting close to something. I've learned to phrase these things carefully over the years, but when you look at what's happening, and like you said, that people are actually buying physical, just puts more pressure on something that was already a bit tight, and be fun to see how it all plays out going forward.
Yeah, you always have a smile on your face, Chris, and you have a great disposition, and that's what you have to be in these crazy times. You just got to kind of roll with it, I guess, and try to smile still at life. I appreciate what you're doing. You're making a difference. Keep doing it. I'm willing to come back anytime you'll have me and give my 2 cents of what's going on, but we need more people like you shining a light on what's really happening so people can be aware. And for what it's worth, I appreciate it, and hopefully hear from some of your listeners, and I'll reply back to them as well, and I'll look forward to picking up with you somewhere shortly down the road, but you be safe and take care of yourself.
Well, I appreciate that, Andy. I thank you again for being a part of the book. I think people are going to love what you shared because it really added some powerful insight into this whole story. So thank you for your help in bringing that all together in one book to make it simple for people, which I think is an important part that our industry can do. So with that said, thank you, sir, and we'll look forward to checking in with you again soon.
Yeah, you take it easy, Chris. By the way, I know I'm going to buy a bunch of those books and give them out to my listeners, so we're excited for that as well. You take care. Thanks again. We'll talk soon.
So that is today's episode. I do thank you for spending some time with me and hope you enjoyed it. If so, go ahead and hit that subscribe button, and I'll see you again soon.